Yo, what is going on, everybody? It is Tugi from Tugi Trading here. Hope you guys are doing well. For today's video, I want to make a video covering how exactly you can keep your losses as minimal as possible, or how to keep your stop loss as minimal as possible. So obviously we can reduce the amount that we are losing. Now keep in mind, losing is completely normal within the markets, within trading. The best of the best, the most profitable traders, they lose. No one is 100%. One of the biggest things is how can we keep those losses as minimal as possible and ensure that our wins are bigger than our losses, right? Because if our losses are the same size as our wins or even bigger, then obviously that's the last place that we want to be. We're going to be losing more money than making money, and that's just not what we want to happen. So I'm going to be covering a couple of key things that you guys can apply in terms of really making sure that you're reducing your losses as much as possible. Now, if you don't know who I am, I've been trading since 2021 for about 5 years now, and I've helped literally hundreds of traders get their start within the markets. So let's go ahead and hop onto the charts and kind of cover a couple of key things that we really want to look for and do when it comes to approaching the markets. So let's go ahead and hop on to the charts here. Now, one thing that I see within a lot of beginner traders, which isn't bad, although I do feel like there can be an alternative solution to reduce their losses, is they'll have a set percentage stop loss for pretty much all of their trades. So let's say you're trading options, for example. If your contracts go to negative 15% or around that area, let's say they have a negative 15% stop loss for all of their trades, right? Once price hits that negative 15% point, they exit, no matter where price is on the charts, no matter how close price is to a certain key level. Now for me, I kind of do things a little bit different, and although my stop loss is pretty similar for all of my trades, I have a lot more confidence within where my stop loss is, that price is likely to still respect my area and continue in my direction. And if it doesn't, obviously still keeping that loss as minimal as possible. And the way that I do that is my stop loss is essentially only at key levels on the charts, whether that be a support area, a resistance area, a fair value gap, a supply zone, a demand zone, a pre-market high, pre-market low, due to the fact that our key levels are essentially barriers on the charts, right? So if we can use those barriers, those key levels as our stop loss, we have more confidence within that area that price will still likely respect that area and continue in our direction. Because like I said, we see our key levels as barriers on the charts, and our key levels can really only do mainly two things. Obviously reverse at that key level and continue in our direction, or break through. And obviously if it breaks through, that's then when our stop loss would be triggered. But in order for a key level or our barrier to get broken through, certain buying pressure or certain selling pressure really has to be strong, right? And if we can identify where we can trade with the momentum, then usually your trades will be a lot more smooth, or pretty much you'll see a lot more success within your trades due to the fact that you're trading with momentum. So one of the biggest things is, obviously we want to be entering at or near key levels and having our stop loss at a break above or below our key level. So in this case scenario here, we have, let's just say we have a simple, let me go ahead and zoom in. We have a simple support level or demand area here. Let's go ahead and just draw out our demand zone as well. So let's say, for example, we have our demand zone right here. So obviously we would wait for price to then tap back into our demand zone, our key level here. And keep in mind, we see our key levels as barriers on the charts, meaning price or momentum really has to be stronger than usual to break through that barrier. So if you can enter at a rejection of that barrier and keep your stop loss below in this case scenario, or if you're trading with a supply zone above then your stop loss A, you'll have a lot more confidence within it, and B, you'll make sure that your losses are reduced significantly. Because in this case scenario, let's say that we would only look for a break below this demand zone, this support level, for our stop loss to be triggered. So let's say, for example, we would enter right here, we'd put our take profit right here, and we would put our stop loss at a complete candle closure below our key level, due to the fact that if we do see price close below that key level, that means that that barrier got broken through, meaning the opposite side of momentum is then being inputted, which obviously we don't want, right? So let's say in this case scenario, we were to enter longs at this key level with a stop loss below our key level, right? Because we're trading with demand. We can see that trade worked out beautifully. But if, let's say, hypothetically, let's say price came down into this zone and continued lower and were to break through that key level, aka our barrier zone, then that's when we would look to start to exit, because obviously we were expecting price to tap into our demand zone here for an excessive amount of buying pressure to then be inputted. But if price were to break below, we never got that buying pressure. That just means that our bias is incorrect, or that just simply means that the zone that we are looking to target isn't valid anymore, because that zone, that barrier level, got broken through. So let's go ahead and look at a couple of different examples and different ways that we can kind of look at this. So let's do something like this right here. Again, another similar situation, right? So we see a strong low being created here before a move up, which we can label as A support level, and B, a demand zone. Now, the more you can kind of stack up those key levels, the more of a barrier you have within price. Keep that in mind. The more key levels you can stack within the same area or, near, the more of a barrier that you have, therefore meaning price is likely to reject off of that zone and not continue lower. So in this case scenario, we have a support level and we have a demand zone. That's two key levels mixed within each other. Therefore, we have the idea, or not idea, we have the understanding that there is a pretty strong barrier here. So in order for price to break through this barrier, selling pressure would need to be super, super strong and push it below. But obviously, we can see once price, let me zoom in a little bit more, once price taps into this demand zone here, we can start to see a little bit of rejection, then ultimately some buying pressure starting to step in. So once we see that buying pressure, that just gives us more of a confirmation that that zone is likely to work out, and that buying pressure that we expected to step in within this level is being inputted. Therefore, we don't really have to worry about our trade going in the opposite direction. So same thing here. Let's say we were to enter at this demand zone, put our take profit right here, and our stop loss is pretty much always going to be in the same spot, which is one of the best things that I love about, this certain sort of, I don't want to call it a strategy, but a way that we can place our stop losses, and that's going to be a break below our key level. So in this case scenario right here, we can see that this key level, a break below it, is very minimal, right? Is very tight. Therefore, meaning our loss if this trade were to go wrong would be very minimal, which is ideal, right? We don't want to have such a wide stop loss, because that's going to make our losses, if that trade doesn't go in our direction, be a lot bigger than what we want it to be ideally, right? And like I was mentioning earlier, one of the biggest things when it comes to trading is how can we keep our losses as minimal as possible. Okay, so boom. We can see here, trade working out in our direction, stop loss being a break below our key level. Why is our stop loss at a break below our key level? Due to the fact that that's where our barrier level is. our barrier level being an area where we know price is likely to respect and reject off of. Okay, so the fact that we know price is likely to respect at that level and not break below, we can put our stop loss below that, like I said, to really protect ourselves even more. So in this case scenario, let's say you were entering just a random trade, like if we were to go long right here, put our stop loss up here, and right here, there's really no key level that we can go off of. So let's say you're a beginner trader that pretty much knows very little. You're like, okay, I'm gonna have about like a 15-20% stop loss, and you're just simply going based off of percentages with your stop loss. Now, like I said, that could be ideal, but it's a lot more ideal to have your stop loss at that key level because it provides you with more of a barrier. Therefore, it gives you more confidence within your trade, and that price is likely to continue moving in your direction. So let's go over a different example and do some type of supply example or resistance example here. Now, let's do something like this. So we have right here, it looks like we have a bit of, actually let's find a better example. I want to do everything live here. So this is actually a really good example. So what we can do is we see our pre-market high right here. We want to mark out that pre-market high, okay? So now we have a bit of resistance, aka supply at this pre-market high level. Let's go ahead and draw out a supply zone as well right here. So now we have two key levels, aka a barrier within price. Now this is going to be a little bit of a different example from our trade actually working out, but I want to show you guys how well something like this actually works in terms of really reducing those stop losses. So let's say we were to look to go short at this key level, at this key level, at this resistance area, at this supply area, right? Now, let's go ahead and set up this trade as if we were to just simply take this trade. Now, we can see that once price approaches our key level here, we simply break above it and we get a strong break. Why do we get a strong break and strong push? Because like I mentioned earlier, in order for price to break through that barrier, we need strong momentum stepping in. And if that strong momentum does step in and break through that barrier, that typically makes our barrier not valid anymore, our key level not valid anymore. Also meaning that we'd want to exit that trade because it's not likely to continue in our direction. So boom, let's say we were to take this entry right here. So boom, price taps in. We get a tiny rejection right here, nothing too crazy. And let's say like right here, we were targeting these lows. Obviously, price didn't really reject back to the downside. We just had a big break above. So in this case scenario, this trade would be a loss, but look how small our stop loss would be, how small our losses would be. Because once price does break above this level and breaks that barrier level, we know that that level is not valid anymore. Therefore, we want to exit and close out our trade. And once we do close out our trade, like I said, our stop would be so minimal to the point where we're pretty much losing nothing, right? So that's one of the biggest things in terms of really using these key levels to minimize your losses, and also most importantly, better understand where to place your stop loss, because I also understand how stressful it can be in terms of understanding where do I put my stop loss, what percentage do I put my stop loss at, what point on the charts do I put my stop loss at. And this is pretty much one of the best things you can do, is place your stop loss at that barrier level, because those barrier levels are where price is likely to respect the most. And if it doesn't, if it does not respect that zone, then boom, it's not valid anymore. Take your small loss and move on to the next trade. Now, let's go ahead and cover a different example. Let's switch over to Tesla for this one. So let's go ahead and look for some sort of demand zone or supply zone that we can kind of go off of here. Now, I want to do everything live here so you guys can kind of see my thought process behind this and how it would look. Okay, so let's do something like this. Now, right here, looks like we have a strong low being created on the charts. Right here, this strong low, then leading to a pretty strong move to the upside. So we essentially have a support level right here at this low, aka a demand zone right here, due to the fact that this is where a low was made, then leading to an aggressive move to the upside. Aggressive move to the upside simply just means that more buying orders than usual are starting to step in. And that's exactly what we want to look for. We want to look for areas on the charts where more volume was inputted, because that's obviously where we want to be trading, where more volume is going to be inputted. So boom, let's go ahead and draw out that demand zone, and then we have our support already drawn out. Now we can see here, price taps into our zone 2 different times, right? And like I've been saying so many times in this video, I've been probably repeating myself, our zone is our barrier level. So we know that once price does come back into our key level, our barrier level, price is likely to respect this zone. So if we were to take a trade off of this level, we would put our stop loss below that level at a break below that level, because a break below that level simply just means that barrier is getting broken through. And if the barrier is getting broken through, it's not valid anymore. It's not strong anymore, right? So let's go ahead and cover this example here, because we did have a slight push through our level, but one of the most important things that you want to look for in terms of understanding is that key level actually broken or not, is looking or waiting for a full candle closure. Right here, price kind of just swept below and reversed back to the upside, so that wouldn't be considered a full closure below or a break through that barrier. Yes, we did push below that barrier, but we did not fully close below. And the fact that we pushed below but didn't fully close below is just more of a confirmation that this demand zone is likely to work out, due to the fact that price came low, it came down, it pushed below just a tiny bit, but those buyers pretty much said, nope, this is our level, this is our turn to step in, and that's ultimately where they held price very, very well and started to reverse price back to the upside. So let's say in this case scenario, we were to look to take a trade off of this level. Per usual, our stop loss is going to be in the same spot. That's going to be a break below our key level. So in this case scenario here, let's say that we are taking this trade. Now price did come down, this wick right here did come down into our stop loss and kind of pushed below, but that's one of the biggest things, like I said, that you want to look for is you want to wait for that full candle closure. We never got that full candle closure. So as you can see, respected off this zone super well, respected our stop loss area, our barrier area very, very well, and then continued in our direction. Now let's cover one more example of our barrier getting broken through, just so you guys can really understand what it would look like. So let's say that we have a supply level right here. We have a supply level right here, and then let's say that we can clearly see once price taps into our supply level multiple times, we did get a rejection, reversal to the downside, rejection, tiny bit of a reversal to the downside. Then what do we see here? We see price starting to slowly push up and break above. So let's say we were to, now this is pre-market, but still let's just imagine this was open market, right? So let's say that we were to look to take a trade off of this supply zone and rejection back to the downside. So let's kind of set up the trade and what that would look like. Let's say we're entering in the middle of our supply zone and we want to target this low right here, right? So let's say we wanted to target that low right there, which would also be a support level. So we would mark that out. Now, what do we have here? We have price kind of doing its thing, and rather than price moving in our direction that we wanted it to, it did the opposite, right? It started to slowly push up and break above. Now, what do we have here? This is what I was talking about. We have a full candlestick closure and push above our zone. We can see right here that this candle completely closed above our zone, above our barrier level, making our barrier broken through. Then we see a stronger move, a stronger push to the upside due to the fact that when we do get those push through those barriers, or when we do break through those barriers, momentum needs to be stronger than usual. And in this case scenario, buying momentum was simply just way stronger than selling. As we can see here, pre-market was just super choppy per usual, but then we started to get some buying momentum inputted, a good amount due to the fact that price broke above our barrier level, and then our trade would have gotten stopped out. Why would we have gotten stopped out? Because it broke and closed above our barrier level. So that's going to be it for this video. I hope you guys enjoyed, learned a couple of new things that you guys can then apply onto the charts. If you were confused about anything, I am posting daily trading content and stories on my Instagram that you guys can always hit me up over there and we can chop it up. But other than that, definitely be sure to leave a like, comment down below if you guys want to see any sort of certain videos, and I will see you guys in the next video. Go catch some snipes on the charts.